Hey, everybody. It is your host here at Contractor Radio, Jim Johnson, also the head coach at Contractor Coach Pro, where we help contractors grow and scale their businesses by becoming better leaders, installing the processes and systems to make them scalable, and then with the whole idea of positioning them where they have personal and financial freedom. And it's kind of cool. Like today, we're going to be talking about some financial freedom and how to get there. Because there's some questions like one of the things about construction, depending on where you're at and what trades you're in and how good you are at sales and how good you are at creating value, we can make a lot of money in this business. But are we smart with it? And do we have a lot to show for it when it's over, or do we misuse it and do crazy, weird things with it? I've got a very good guest on today. He's got a pretty strong track record, and it actually comes from a family aspect of things. I want to just welcome to the show Timothy Wingate, the founder and president of G+F Financial. Timothy, good to have you on board, brother.
Oh, man. Thanks for having me. I appreciate it. Thank you so much.
Yeah, this is going to be a fun time today because we are talking about this thing where there's a certain amount of profit that we can generate in this industry, and being wise with what we do with that profit, positioning our businesses well, and how they're structured, what we spend our money on, understanding our cash flow. All of those things are so important to how much money you end up with in the end, and the risk that you keep yourself from. So could you tell us a little bit about your history? What got you into this? What brought you along, and a little bit about G+F Financial today?
Yeah, so it's interesting. My father is a contractor. He's a GC. He's been licensed since 1984. So I grew up in the construction industry, grew up slaving out there in the Florida sun, hitting the dirt hard.
Yeah, I'm from Houston, Texas, man. I know what you're talking about. It's terrible.
Yeah, it's terrible. I don't know why he did that to me, but he did pay me below minimum wage, matter of fact.
That's what kids are for.
Yeah, that's what kids are for. But I learned a lot. I learned that I didn't want to work in the sun. I also learned that, these guys need a lot of help. They're great at running their jobs, running their projects, and doing those type of things. But I saw a lot of up and downs with my dad financially. He had a good years versus bad years versus good months versus bad months, and didn't understand it as a kid. But definitely when I got to be an adult, I understood that he just needed some assistance and some guidance around his finances, and definitely getting a degree in finance helped me out a lot to understand the economics of how this world works and what we need to do with our money. Also, having a focus on the tax side of things and getting my EA license allowed me to see how can we save money, for the company and for the individual through taxes. So just putting those two things together, I saw that I could really just niche down in the construction industry and help them because I like these guys. They're real. They're down to earth. And when you're their guy, you're their guy. And so that's why I chose the construction industry. And that's why I said I can see myself doing this for a very long time in this niche.
That's pretty awesome. Like dad GC, right? And dad goes, I got to send this kid to college. What should I have? Oh, how about finances? Like that's that thing. I can get that thing covered. I can't wait to meet your dad. It sounds like a pretty smart guy.
Really
and
smart.
You're right,
really.
Though. As a contractor, we're good at what we do, and usually two sides of the coin. We're either really good on the production side of it, and through that great production and great customer experience, we get lots of referrals, right? We get continued word of mouth type business. The other side of it is the sales side of it. Like, hey, we're great at marketing and sales and generating business. And that seems to be the common theme between who starts a business. Like they do one of those two things really, really well. But from a running a business perspective, perspective, and really that's like why we exist, that's a whole different animal. Building whatever it is you build, whether it's putting a roof on or building a skyscraper, that takes us a skill that is far and few between, to be honest with you. But the idea of running a business, eliminating risk from you from a financial and economic standpoint. Those aren't things that we get a lot of schooling with. And especially getting into contracting, it's a pretty low barrier of entry. It's not real hard. You can go take a test and get your contractor's license, at least in some states. Some states don't even have that. You got a hammer in a truck, you're a contractor, right?
That's it.
And so people wonder why contractors get such a bad rap. It's because they're not required to go get any kind of business training or financial training or any of that kind of stuff. They just assume like, hey, you do good work or you can sell me a job. They're a contractor. What are some of the biggest things that whenever you get involved with a contractor that you notice right away that seem to be thematic, the mistakes that might be made that we could solve pretty easily if we just knew about
them? Starting a company with not enough capital. So that's one of the first things I see. Like they go out and or misuse of the capital. So going out, buying all these tools. I mean, contractors, they love tools, tools, machines, all these things. Yeah, trucks, and so they go out and buy all these things in hopes that it's going to make them a lot of money. And sometimes they get in debt with those purchases as well, a truck loan, equipment loan, even sometimes they're financing their tools with their local hardware store and those type of things. And so those things get them in trouble. So you want to make sure, number one, is like, how do I ensure that I'm starting this company with the right amount of resources, financial resources? And then the second thing you need to think about is how I'm going to get my name out there, what I'm going to specialize in, the marketing side of it. Some of these guys don't really spend a lot of time on the marketing side. And so they find themselves in this tough seat because it's like, hey, I can really go out here and perform well, but I can't get the customer to the door, so how do I get that pipeline, or how do I even manage that? I can't even return phone calls because I'm out in the field doing all the work. And then I got about 4 or 5 messages to return back, but it's already 5 o'clock, 6 o'clock at the end of the day, so it just, a lot of those things are happening too. So getting a handle on your marketing and getting a handle on what type of resources I need and how much of it do I need to start this company on the right foot.
I already like you, Timothy. I think you you kind of hit the nail on the head. I think a lot of us go out there and sometimes it's almost organic how the business starts. Like you're working on somebody's house and the next door neighbor's like, hey, can you come work on my house? And all of a sudden you got this side job and then there's another side job. And then all of a sudden you're like, okay, I got to go get like my business license and set up a bank account.
Right.
So that's how it tends to start for a lot of folks. And they're in business, but they don't realize that now that they're in business, there's other things at play and they don't have enough capital going into it. And then when they're not wise with the capital they do have, like you said, spending it on the shiny objects, that can get you crippled pretty fast. And getting overextended on cash flow and things like that, buying things on credit, and not even just tools and stuff, like buying your materials and things like that on credit. You're not able to pay quickly enough because you get slow played by who you're providing for, whether that be a commercial project or a residential project. Well, that bank still wants their money and that supplier still wants their money, and they're going to start adding finance charges on it and take you out. And the other one I thought was interesting was the marketing part. Like I wasn't expecting a financial guy to say, hey, the marketing part you guys really need to pay attention to. And it's why we exist. This is the reason we exist, is because we believe there's actually timing to this thing, that certain things need to happen in a certain order. But we get so excited, like, hey, we did something good. We made a little bit of money. And this guy comes up to me and says, hey, I can get you all kinds of leads. And you're like, all right, that sounds wonderful. I need more leads.
Yeah.
Do you really need more leads? Or could you just be better with the leads you have? Or if you get those leads, do you actually know how to sell it? Or so you don't burn your money that you spent on your leads? And is getting leads through like paid advertising the best possible way for you to do it early on in the process? Or could you do something more organic and lower cost? Do you talk with guys about that kind of stuff?
I type with them about that all the time. As you can see, I led with those answers because those are things I want to understand about the company, so that way I could really help guide them through this financial journey. First thing we always talk about is, what is the vision and goal of the company? Because the vision for the next 3 years may be different for the vision in the next 12 months. So I want to see how much thought you have put into, really structuring your company and really gaining an understanding of, okay, this is where we're going. Because if we don't understand where we're going, then the business will lead us and take us down any path. It's like who's ever paying the most, who's ever giving me the jobs right now, that's what I'm going to take. And I'm just going to keep taking all these things. And then you'll wind up with a business that you didn't understand, or you didn't even want to get into this side of the business. There's so many different lanes of construction. And so you have to pick your lane and really think about it like, hey, what is my innate ability? How can I maximize that in this lane of construction? And then who's my targeted customer? Who do I want to deal with, work with, those type of things. So that way we can have all that figured out. So at least it's on paper. And then if it's on paper and it's not working, then we make adjustments. But it's easy to make adjustments for something that's already laid out versus trying to make adjustments when you have to figure out, okay, what is the layout? What are we doing? Yeah.
I look at it like you're at the shooting range, right? Like if you got a good rest, you got a good scope, you have some skill and some training. You miss the target, it's just a slight adjustment, right?
Yeah.
But if you don't have any of that, you're at a shooting range with pistols, and you're just firing off, shooting from the hip, right? You don't know what to do.
Yeah.
And that can get us in a bunch of trouble. There was another thing that you mentioned, which was time. It was kind of a part of those two answers, that because they're so busy out doing all the other stuff, that they're not able to, create the marketing they need, or build the brand that they need to build, or pay attention to their finances the way they need to. Whenever you ask somebody, do they have a vision for their business? What's the normal answer?
Normal answer is I never really thought about it. I kind of just got into this, organically. It just happened. But no one, I rarely find someone who was very intentional, about getting into a certain lane of construction, unless it was passed down from, a grandfather or a dad or something like that. But if they're, first generation, a lot of times it was just something, hey, I wanted to do, and I just started it. And just want to see, and I just want to make as much money as I can. That's why I hear that a lot. Like, I just want to make as much money as I can. And
as much money as you can, or as much money as you need, or as much money as you want.
Right. Yeah. So we got to dial that in a little bit more, because making as much money as I can could lead me down any path. But go ahead. Yeah.
No, I was just going to say, did you know that the average income of your a home service contractor out there, like what they actually make take home whenever it's all said and done?
I don't know, but I would like to guess, if you don't mind.
Okay, go ahead, guess.
Okay. All right. So I would guess it will probably be around, and we're saying residential, right? So
yeah, residential. We assume commercial, we hope, has a little bit more skill behind it, like they've gravitated toward that usually.
I would say between 30 and 40,000.
It's a little higher than that. A good guess, though. $55,000 for all that work and all that effort and all this. Like I could make that just going to be a guy on the crew. Might as well go do that, because this business now owns me instead of me owning the business, because I'm trying to do everything else. And so one of the questions we always get as coaches, and we coach much for some of the reasons that you're bringing out, right? Like, the very first thing we do is we're like, what's the dream for you personally? For
Yes.
you personally, what's the dream? Because we all have this thing that's usually bouncing around in our head like a BB in a fruit jar, but it's a foggy notion of what we would like to achieve at some point in our life. We want to get clarity on that, because then we can take that and generate the vision for the business. The vision should facilitate your dream, right? It should be the vehicle for your dream. And then we take that vision, we break it down into a 3-year thing, and then a year mission, and then what we call quarterly tops, these tactical operating priorities to do every quarter that builds towards the mission, towards the vision, ultimately towards the dream. And getting that very clear, very defined, so that we don't get off the path. You got some boundaries. You were talking about the direction of your business can go anywhere when you don't have a North Star that you're shooting for. I really hate interrupting these videos, but I've got some important information for you. If you haven't tried out Atlas Shingles, you should, because they put you first as a contractor. They want to give you a competitive advantage out in the field so that you can win more sales and be more profitable. Check out Atlas in your local area, find your local rep, get hooked up with them today, and start making more money tomorrow. So my question to you, whenever they're saying, hey, I need to hire somebody, like I think they innately know that they need to hire somebody. Who are you seeing them, their first instincts, not your advice? Who are you seeing them trying to hire?
Just a laborer.
Yeah, somebody to do what they do, right?
Yep. Just a laborer.
And what's your advice when it comes to
that? So the first thing is I have to talk about, what do you ultimately want to do in the company? Like, do you want to be out in the field? Do you want to be selling? Do you want to be in the office? Like, what do you ultimately want to do in the company? So that helps me understand where to look for the hire. So a lot of the guys say, I can't stand, the office work. I just can't.
None of us can.
That's
one of those things, man. Yeah, Timothy, but not my jam.
Yeah, just can't stand the office work. So, number one, the first hire they should have is someone who understands the numbers. You need someone who's gonna get in there and help you navigate every month financially. After that, you need someone to process this paperwork. There's a ton of paperwork in construction. And if you're a person who just say, hey, I can really go out here and run a project, supervise this project, make sure everything's on schedule. I just need someone just to make sure that they're ordering materials, communicating with the clients, getting receipts and things back to the accountant. Then we need someone in the office, and either that can be like a project coordinator or some type of office administrator. And so those would be like the main positions in the company. You need someone managing the field, so that's super. You need someone in the office who's pushing all the paperwork, and then you need someone who's helping you strategize month to month on the finances.
I feel like I need to hire you, Timothy. Like this is what we talk about. Usually the first hire isn't what you do. We get so many that are like, they're the guy with the skill, right? And they want to hire another guy with the skill so they can like go in and do paperwork which they hate doing in the first place, but they know it needs to be done, and they figure they'll figure it out. Where really the ultimate option is hire the person that does all the stuff you don't like doing. I don't like doing paperwork. I don't like doing bookkeeping. I don't like doing that. You keep going out there in the field generating revenue and pay somebody to do those things. It will create the finances for you to start hiring those people that do what you do.
Absolutely.
So good job. Well done. You answered. It's gold star for Timothy today. At least maybe we're right. But if two people are of the same mind, it's usually a good thing.
Yeah.
So what makes a construction accountant different from just a regular old accountant? We see that kind of stuff all the time, but what makes them different?
We speak the language. We speak the language. You understand what a beam is. We understand, rebar, all these different things. So these things come up on the receipts, and you need someone to interpret that. We're not really trying to hunt you down too much. We may have a different supplier we're unfamiliar with, but we understand the language. The other thing is we understand job cost accounting. Job cost accounting is a specialized accounting. There's 3 specialty accountings in the accounting world. That's nonprofit, manufacturing, and construction. You will never see me do manufacturing accounting because I didn't learn it. All right.
Smart man.
Smart man, right? And I actually have a nonprofit accounting background, but I didn't like it. So construction accounting is a very specialized type of accounting, and not just the traditional accountant is going to know how to do those things. They're not going to be able to suggest the right financial tools to complement your company and what it needs to run, smoothly, and to evaluate jobs and know how profitable you are. They don't teach you these specialized things in school. In school, they give you managerial accounting, financial accounting, and teach you a little bit about audits, business law, those type of things. But to get that specialized training, you usually need a mentor. You need to read a lot of books. So
I know that feeling on the business side. There's not really, nowadays I see more of it than there used to be, but there wasn't like, hey, this kid's wired for being an entrepreneur. Here's entrepreneurial school.
Yeah.
And all the things that you would need from a business and just general business and risk assessment to financial assessments and all the things that we've got to do, the soft skills of being a leader. There's no school for that. And it's read a bunch of books and hopefully you find a good mentor and maybe somewhere along the way you figure it out.
Yeah. And the traditional accountants, they're working with an array of clients. And a construction accountant is only dealing with people in the construction industry, so I'm working with different tradesmen and specialty contractors and all these things. So I'm very in tune with what's happening in the construction industry. Also best practices that are being shared within the industry as well. So construction accounting is just something very specialized. And I think if anyone who's looking to have someone on their team, they want someone who's very specialized, who can help them because they understand their industry very well.
I'll tell you, I'll be honest, is my biggest mistake is I hired a traditional bookkeeper / accountant both at the same time, right? I had one bookkeeper, one CPA. They're very traditional. They knew, straight up accounting. And it really got me into some hot water in a couple of different areas. One was insurance audits and what to deal with that on that side of things. The other thing that it got me in hot water on is I didn't understand cash flow and the difference between accrual and cash finance. And so it seems to me that the construction accountant has a really good grasp on those. On one of the things you said with job costing, but also this work in progress aspect of things. I got work that's out there and I have these bills associated with it, labor and material and all the other things. That's not your money yet.
Right.
Right? Like you can't spend that money like it's yours because you're going to have to pay it to somebody. Is that something that you see mistakes in as well out there in your work?
One of the biggest mistakes that I see is just not having reliable numbers, period. Hey, I've been trying to fix my QuickBooks for the last 5 years, finally got it right, and I think it's working for me. Well, if you finally got it right, that means you have so much bad data in there that you don't have it right. So
5 years. That sounds terrible.
Yeah. So that's one of the first mistakes, either you being your own bookkeeper or you hiring someone who doesn't have that skill set and they're just jacking up your books from day one. So you just can't, your numbers are just not reliable. And so I don't even prepare. Like I have people that come to me and say, hey, Tim, I want to hire you, hire your company. The last 5 years were done by someone else. I want to have this year done. Well, I need to look at your books and see how healthy they are. If they're not healthy, if they aren't reliable, then I'm going to tell you we have to start over from the top of the year. And then we have to get clean data inside of that year so that way I can prepare the taxes, because I can't prepare taxes on bad data. It's just not, it's not going to help you. It's not going to help me. We just can't do it. So that's one of the first things. And then just not understanding, are you overbilled or underbilled on the project?
Mm.
That's a
how do you keep them from, how do you put things in place to keep that from happening?
So we start off by getting a project management software, because you need to have something that's keeping track of all these projects that are going on at different stages, and they're different sizes, and and all that. I have a project management software that I use internally with my team to keep track of all the construction clients that I service, because if I'm not doing that, there's no way I can keep all that stuff in my head. There's no way that I can know if I'm overbilled or underbilled on a project in my head. Just impossible. So, I know there's a lot of sharp guys out there, who are really good with numbers. Nobody's that sharp. Nobody's that sharp. So, you need a project management solution so that way you can keep track of these projects, one by one. And then you need real-time data fed into that solution. So that solution needs to be integrated with your accounting solution, and then they need to be exchanging information daily. So now, that way, go ahead.
I'm sorry, I didn't mean to interrupt you, but is there, you talked about some project management software, some tools that work together, real-time numbers. Are there tools out there that you specifically say use these, or do you have a variety of them based on the client that you're serving?
Yeah, I'm biased to Build-A-Trend. Build-A-Trend is my top project management software that I like to use. QuickBooks is my accounting solution. Bill.com is my bill pay solution. Dex is my receipt capture solution. And usually those four things working together gets us, a nice tech stack where we're running pretty smoothly.
Yeah, I'm going to have to introduce you to Clear.io. They got a pretty cool receipt management, expense management tool. It's pretty sure, like new thing out, and it's pretty awesome.
Yeah. Love it.
Yeah. So that technology is just, it's a must have today. You cannot not any longer keep it in spreadsheets and put your receipts in a box, right?
No, that's not working.
I know one of the key words that I hear that I know they don't know their numbers when they say the word about. But we did about 3 million last year. What do you mean you did about? Was it 2? Really?
Yeah.
Or was it 3.5? What was the exact number? And they couldn't tell you.
Yeah.
We have about this much invested in marketing annually. About is the worst word you can possibly. I mean, you're off 0.5% or 1%. You're about out of business if you don't watch it. Do you guys do that to you? When you start with them?
When I first meet with them, yes. When I first meet with them, they say, I think we're going to do about, 5 million this year or 8 million this year, but no one knows for sure. Then when I get in and dive into the books and I actually see the deposits and average them out and then come up with an estimated annual revenue for them, sometimes it may be $1 million or $2 million off. So.
But what's even worse? That's forecasting. Like that's saying, hey, by the end of the year we should do this. These are people from like what they did last year. Like we did about. How do you do about 3 million? I don't even know how that's possible. I did $3,126,280.15.
Absolutely,
like it should be exact.
It should be.
Now, do you work with guys that do multiple trades?
I do work with guys that do multiple trades. Those usually are the GCs, but they're more on the construction management side of things. Not so much like, hey, I'm a plumber and an electrician. No.
Okay. How about guys that do like roofing, siding, and windows or something like that, like exteriors guys?
Yeah.
Okay.
We work with those guys.
That's good. We have a lot of those guys that listen to us. So one of the things that's always frustrated me about that side of the world is they tend to look at their business as a whole. Like we had this much revenue, this much in job costs, this much in overhead, leaving me with this number. but they don't analyze by trade.
Yes.
Which one's profitable, right?
Mm-hmm. Mm-hmm.
And when I dig in as like early on, and I'm not an accountant, just to be really clear. I want to be like, they should work with folks like you, or our financial coach, or one of those folks, right?
Yeah.
We're more on the strategy, where your guys seem to be a bit more on the execution and strategy.
Mm-hmm.
So when I dig in, I start looking, I'm like, dude, why are you doing gutters? I mean, seriously, you make 0.10% profit off of it for the whole year. Why do you do that? Well, we got to do that to do the other. Like, no, you don't. There is no requirement that says you have to do this to do that. Do you ever run into that kind of stuff where you say, hey, you either got to charge more or stop doing it?
Yeah. I had a utility contractor who was doing, putting pipe in the ground, but also wanted to do paving, and so two separate types of cost codes altogether. That's number one, so just from an accounting perspective, to stay organized, if you're doing two different trades, usually they need two separate sets of cost codes. And so therefore you need to make sure that you're using the right cost codes to keep track of everything and tie it into the right income account. So it gets really, your chart of accounts can get really massive, by having, so many trades that you're working with. So yeah, so it's one of those things like, hey, you had to buy, this big paving machine over here, but then over here you had to buy, all this CAT equipment. You're not making enough money on the paving side to really justify it, to continue on and do these things. So we need to start to look at some other options. So those are the things that I see a lot, where not a lot. Let me change that. Where I see in some cases where they may want to try something new, try a new trade or add some type of other service, and then it's like, okay, if we're gonna try it, we're gonna track it, and if we track it, are we making enough money from it? And then if we're not, then we need to evaluate whether to drop it or not. So I'm big on shooting you straight, because it doesn't do any of us any good if I'm not shooting you straight. And so it's just, hey, this is not making you enough money. Let's drop it. Let's focus more of our efforts here. And when you're focused on your efforts on one particular trade, everything gets simpler. Your marketing dollars get more targeted. Everything starts to get more targeted. So you're not wasting money in different areas or testing things, because marketing is all about it's a test environment. But when you're testing one thing, the chances of you getting really good at that one thing is much higher than if you were to try two different test markets.
Yeah, we call that bullseye marketing. I know my bullseye, and I can market specifically. If you say, I'm an exteriors remodeler, nobody looks that up on Google. They don't go, who's the best exteriors remodeler in town, right? They go, who does the best siding? Who does the best roofing? If you do interiors, who does the best kitchens? Like that type of thing is how people tend to look things up. And so I agree with you 100%. The more niche you can be, the better you can market and advertise and be profitable.
I really hate interrupting these videos, but I needed to take a moment to tell you about Moment Finance. They are the technology company that makes financing simple and easy for your clients. If you're not offering financing right now, did you know that you're missing out on 20 to 30% of the sales that you could make? And then a company like Moment teaches you actually how to sell financing. Don't miss out on those opportunities to make more money doing what it is that you do by being able to close more sales. Check out Moment Finance down the link below. We'll see you later.
So I'm a contractor.
Okay.
You're my bookkeeper / accountant genius. How do you make me make more money per job? How do you increase my margins?
The way that we look at that, we first decide what is your desired operating margin. So we have to find out what 50%. That is. Hey, if it's 50%, then we're going to tell you, okay, good, we have that number. Now, let's understand our labor burden costs. because we need to understand how much each employee costs the company, And so once we understand that, then we'll hop in and say, okay, how profitable are we on current projects? Do we need to change our markups to yield the right margin collectively so we could reach that desired operating profit margin? So it's a couple of things that we're looking at to make that decision or to help you increase your revenue and increase your profitability. So those are the data points that you got to constantly monitor as you're growing and as you're bringing on more people to help you grow. So
you do something there that I find very valuable. What is the worth per person that works for me? And so how do you derive that?
Yeah, so we're looking at, number one, how much we're going to pay them an hour. And then we're breaking this down as in, okay, because we brought them on, do we now have to get another user subscription? So now we need to add that into their cost, their hourly rate. And then workers' comp is, they're going to come on a workers' comp policy. So then we need to add that in. We want to pay them 2 weeks of paid time off. Got to add that in. We give them 5-6 days. Add that in. We pay for their health insurance. Add that in. So we start adding
up in a hurry.
Yeah, start adding up. And so now
$50,000 a year. No, you don't. No, you don't. Not even close.
Yeah.
Do you do anything where you do calculations based off of so you take the revenue divided by the number of employees and say, okay, we're at 350,000 per employee that we've got to generate. That's low or high. Do you have any of that kind of stuff that you guys go into with your clients?
Yeah. So what we do is we see how much of salaries makes up revenue. So usually when that number is above 30%, then the company's in trouble. So that's usually one of the first things that I'm looking at when I'm doing my evaluation. I'm looking at, okay, how much of revenue is salary? And I've seen some scary cases. I've seen 50%.
That went down low. I like performance-based pay, man.
Yeah. So those things are really important KPIs to look at. And so we monitor that. The other thing is I look at what we call a current ratio. And that's like how much money you have today in assets to pay off your current liabilities. Can you pay it off one time? Can you pay it off 2, 3, 4, 5 times today? And so that shows.
What do you want that to be?
I want that to be at least 3. I want that to be at least 3.
I feel like I need to hire you, Timothy. You need to come to work for me. You're speaking our language, brother. That's good.
Yeah.
So if I was a contractor today and I'm just getting into things, I know I need to build up what I need to build up. You're like bookkeeper first, paperwork person first, a combo, like they can do both kind of, like who would that be? Or can they like outsource to a company like you and it would be cheaper? Because that's always the decision, right? Like, so do I outsource to a third party or do I actually hire somebody?
I would say this here, like I just be honest, like there's no contractor paying less than $3,000 a month with me. So we'll say $3,000 a month. That's times 12. And, you got 36,000, right? 36,000, and you have an experienced bookkeeper, an experienced accountant, and someone meeting with you every week to make sure accounts payable, accounts receivables is up to date. They're not making a bunch of mistakes or no mistakes at all. And then you have this strategic person meeting with you to go over all types of construction strategies, financial strategies, and you're getting your taxes prepared. You can't find one single employee who can do all those things.
I would agree with that. Like, and depending on where you are, it might not be a full-time job yet. You're $1 million, maybe $2 million. It's kind of a part-time job. And a lot of people, what I see is them hire like their buddy's girlfriend. She knows how to work QuickBooks. She can do your stuff for you. I'm like, God, please don't do that. That's such a bad idea. I'd much rather you get a third-party person, because for $36,000, Sounds like we get a lot of bases covered that need to be covered early on, especially, which the employees to cover that would probably be at least double that, probably even more. So it seems like a good way, at least to begin with. Now, as time goes on and we get bigger and bigger, your value would have to improve more and more for me to justify going, I might want to hire a CFO or something like that to be in charge. Like we get into $10, $15, $20 million business. So when it comes down to you working with, like, who works with them? Is it you? Is it somebody else? Who's working with them?
Yeah. So primarily you're working with the bookkeeper on a week-to-week basis. They have part of their package where they can pick to meet with me either every 2 weeks, every month, every 2 months, every quarter. Those are the options to meet with me. And then when we're meeting, we're going over different things. Just depends on what's important at the time. And so, but that bookkeeper meeting, that's the most important meeting because they're making sure that all the data is in accurately, everything is in and ready to go. So when we do meet, we can pull reports, we can dig into the numbers, we can talk, ratios and all these different KPIs that will help us make decisions. So that's really how the relationship works with our team.
Okay, gotcha. I got another question because I think this is one that trips up a bunch of contractors. We always want to operate debt-free, right? Like that's always the idea. Like everybody's like, hey, debt-free, nothing back there. And I don't know if I necessarily agree with that personally. Like it's always this balance for me on interest rate. Like if my interest rate's low and I can get the cash, what can I do with that cash to invest and earn more than that interest rate? When do I know that I should, or how do I assess when I should maybe get a business loan or a line of credit? And those vary too. So like it could be a business loan or a line of credit through like a bank type organization. I can get a business loan from like my buddy to a venture capital company and all those type of things. There's also like lines of credit that are at your supplier. How would I know which one and when as I'm growing along as a contractor?
It's very simple for me. It's when you know the money is guaranteed and coming. A lot of people get a loan in hopes that this is going to help them gain more clients or do a better job. No, you need to know already that you are already doing a good job with what you have, and this is just going to enhance it. Or that you signed this contract, the first draw payment is coming, and it's already been approved, but you just need some cash to carry you along to get you through that tough time. And because, maybe it's you on a 30-day, 45-day net, I don't know. And so that's when you need that line of credit to come into play. Loans, it's hard to get loans and lines of credits. Depends on how young the company is, how strong the financials are. Because here's another thing too that a lot of people trip up on. If you want to get a loan, you need to be profitable. Banks don't want to give loan to businesses that are not profitable. And so if I'm profitable, guess what? I'm going to pay some taxes. But everybody don't want to pay taxes. So they claim these big losses. And then now you can't go get a loan or a line of credit because your financials are not strong. So that's where that vision and goal planning comes into play. It's like, hey, if we're really trying to do this thing, then we need to prepare to pay taxes so that way we can position our company to get a nice line of credit or a nice loan at a good interest rate, and we can do some other things with that. So definitely I'm big on like these products, because these loans and all lines of credit, these are just products to me. And because I came from banking, so that's how I know they're products. Like I made a lot of money off of them. So yeah, these products are just tools to help you get to a certain place. So one day you don't have to use, so much of the product, and you are debt free, or you can be debt free because you have enough capital and cash, and that current ratio becomes, 10 or 12 or 20, and that will be like unbelievable to have that much cash to cover current liabilities. So those are the things that I want to see us work towards, so that way the company is healthy. And then when we have economic meltdown, like a COVID again or something like that, then we are still in business. We're not folding, we're not closing our doors.
Timothy, man, that's some strong advice right there. Like, it's one of those things I see a lot of guys make some mistakes in that arena. They get loans because they think if they get the loan, they're going to springboard their business to actually make money that they're not already making or insured of making. So that's really strong advice. The other one is your business needs to be in that position so that you don't have to sign a personal guarantee. You see these lines of credit in a lot of situations. They want you to sign a personal guarantee. But if you're not insured the money's coming and something doesn't go well, not only do you lose your business, but you lose your own personal credit, which is devastating, bankruptcies and everything else that goes along with that. Yeah. It sounds like you are positioned well to keep people from getting into that situation.
Absolutely.
If somebody wanted to talk to you, how would they get hold of G+F Financial?
Yeah, so you can come to the website, construction.accountant, and you'll get to the main website. Other ways that you can reach out to us, or I should say connect with me, would be LinkedIn first. I'm on LinkedIn heavily, and then Instagram would be next, and then Facebook. So and then also, our YouTube channel usually has a lot of information. Like you'll see all the other podcasts I've been on. You'll see more about the company, more about how we run things here. So yeah, go on our YouTube channel and you can get a lot of information there too.
Well, you've been an awesome guest today, Timothy. I really appreciate your time. There's a lot of valuable information. I always have caution when I do one on finance. Yeah, I do one on HR. Like most owners are like, tuned out, right? Like, it's the ones that really, the things that you're avoiding are the ones that you should be listening to. Those are the things that you should be paying attention to, because they're the things that are probably going to trip you up the most. I learned that the hard way. It's why I do these podcasts, because I think others out there, I would like to prevent them from learning it the hard way. Thank you for your time today. Really appreciate you, Timothy.
Thank you for having me, Jim. I appreciate it.
No problem, man. No problem. It was a lot of fun.
I enjoyed it. All right.
Hey, thanks a lot. All right, everybody. That was Timothy Wingate from G+F Financial. I asked him before the show started, I'm like, hey, what does G+F stand for? Because I know what it would be for me. And he's like, God plus family. I'm like, that is awesome. Super guy, very intelligent. Like I threw some questions out there that would normally trip up somebody. And he sounds like more than an accountant. Like he's got some pretty good strategy as well. Use these resources. He says he has a YouTube channel out there. Go watch it. He says he's on LinkedIn. Go engage with him, especially if it's one of those areas of your business you've been avoiding. The other one I'll say to you, and this is the one that kind of held me back, I was embarrassed. I was embarrassed to go get a pro involved because I knew the second they did, they were going to see how terrible I was at it, what I owed in taxes, how bad I was at managing my finances, and all that other good stuff. Here's the deal. They're like doctors or attorneys or therapists. They don't tell anybody. And they're like, hey, man, you're a mess. You need me. I got you. They don't go out there and broadcast it to the entire world that you're like, that guy's terrible at finances. So to think of it as like HIPAA laws for your own finances. Stop being embarrassed. We're not all great at everything. Go get the right people involved, and you'll be shocked at how much more stress and anxiety and pain comes off of you because you got a professional or specialist involved helping you. If you didn't learn anything else from today, that's number one. Stop being embarrassed. Go get the professional to help you out. Thanks for being here today on Contractor Radio. Another episode in our journey. I think this is 173 or 74, something like that. I kind of lost count after 4 years. And another great one, another great guest. If for some reason you're struggling in your business, you're tired of your business owning you instead of you owning your business, hop on our website. Go to contractorcoachpro.com, click on the assessment button, and do an assessment of your business. It'll take you 15, 20 minutes. It's no joke. It took us a long time and hundreds of hours to put this thing together, but it'll give us some very good insight into where your business might be weak. We cover 12 areas of the business, and if you do it and take it, we'll actually hop on a free coaching call with you. It'll be the last question. When do you want to set up your free coaching call? Pick a time on our schedule where we're available and you're available, and we'll actually do a coaching call. We're not going to do a sales pitch or anything like that. We're going to say, hey, these 2 or 3 things right here, if you made this move or moved this position, you'd propel your business forward pretty quickly. If you like coaching, want to work with us, great. We would love that. If not, well, at least we served you well that day. And that's our whole job here, is to help contractors succeed, achieve their dreams, and get into this position of working on it and start up in it every single day, because it's a vehicle to achieving your dreams. Thanks for being here with us on Contractor Radio, and we'll see you on the next episode.